Imagine this, you sell a car, or you finally close on the sale of the house, or a small inheritance comes through, and you walk into your own bank with your own money to put it in your own account, and before you've even got back to your car, your bank has quietly filed a report about you and sent it to a federal government agency in Ottawa. You weren't told you did nothing wrong, but there is a specific amount of money that the moment it crosses the counter forces your bank by law to report you. There's a second rule that catches the people who try to be clever about it, and it's worse than the first. And there's a brand new law passed just this year that has banks flagging ordinary seniors harder and more nervously than they ever have before. Now, I need you to hear something right up front because I don't ever want to scare you without also settling you. Being reported in this way is not the same as being in trouble. Not even close. But you deserve to understand exactly how it works, because when you don't, a completely normal deposit can turn into questions, a hold on your money, and a very stressful afternoon. So stay with me and I'll give you the exact number, what actually happens behind that counter, and the simple things you can do to move your own money without a single headache. My name is Dr. Elizabeth Thorne, and for 15 years, I worked inside Canada's retirement tax and benefit system. The pensions, the paperwork, the rules that quietly govern a senior's money. I'm not a lawyer, and I'm not here to frighten you. What I do on this channel is take the rules that are written to be missed and lay them out in plain English so that nothing about your own money ever catches you off guard. So, let's start with who's actually watching, because the name matters, and most people have never heard it said out loud. There is a federal agency in this country called FINTRAC. That stands for the Financial Transactions and Reports Analysis Centre of Canada. Just remember the word FINTRAC. Its whole job is to watch the movement of money across the country to catch money laundering and the financing of serious crime. And here is the key thing. FINTRAC does not sit and watch your account itself. Instead, the law requires your bank, every credit union, and every financial institution in the country to do the watching for it and to send in a report whenever certain things happen. Your bank has no choice. It is legally required, and if it fails to report, the bank itself faces enormous penalties. So when your teller files that report, they're protecting themselves from a rule that lands on them, not on you. Now, the number I want burned into your memory is $10,000. If you deposit or withdraw $10,000 or more in physical cash in a single transaction, your bank must automatically file a large cash transaction report to FINTRAC every single time. It's an automatic rule that trips the moment physical cash moves across that counter in either direction. If you send a large amount, $10,000 or more, as an international wire transfer, that gets reported under a separate rule too. But the big one that touches ordinary people at the counter is cash. Here's where a lot of honest people accidentally make things worse for themselves. People hear $10,000 gets reported and they think they found a loophole. They think, I'll just bring in $9,000 today and a bit more tomorrow to break it into pieces. Please do not do that. There is a second rule built specifically to catch exactly that, called the 24-hour rule. If you make 2 or more cash transactions that add up to $10,000 or more within a 24-hour window, the bank has to add them together and report them as one. More importantly, deliberately breaking a large amount into smaller pieces to dodge the reporting is a federal offense called structuring. Trying to be clever about it is the thing that actually makes the bank see you as suspicious. Doing it all in one clean, open transaction is always the safest move. There's a third way a report can be filed that has no number attached to it at all, a suspicious transaction report. A bank can file one of these for any amount, $5,000, $2,000, if the transaction simply doesn't fit what they know about you. Say you've banked at the same branch for 30 years with small predictable pension amounts, and then one day you walk in with $4,000 in cash because you sold an old truck. It's below $10,000, but because it's outside your normal pattern, the teller can flag it. If you're asked a friendly question about where the money came from, don't panic. Just answer it openly because it's a routine question, not an accusation. This brings up the question I get more than any other. Does this mean the CRA is watching my account? Let me answer that plainly. FINTRAC and the CRA are two separate agencies with separate jobs. FINTRAC is not a tax auditor, and a report landing there is not a tax audit. While the law does allow FINTRAC to share information with the CRA when there is a genuine reason to investigate serious crime, it is a world away from every deposit being fed to the taxman. For an honest senior whose taxes are filed, a routine report is not a doorway to a tax audit. Unfortunately, these rules often catch ordinary grandparents at the biggest money moments of their lives. Picture a man named Harold, 73 years old. Harold sells the family home to downsize and move closer to his daughter. The sale goes through, and he needs to move a large chunk of that money or take a sizable amount out to help his daughter with her down payment. His money is honestly earned and taxes are paid, but because the amount is large and unusual for his account, he suddenly gets unexpected questions and a temporary hold. Harold stands there feeling like a suspect. The same thing happens with inheritances, large RRIF withdrawals, selling a cottage, or gifting a sum to a grandchild. Think of a woman named Margaret, who loses her husband. In the middle of her grief, his life insurance pays out. When she tries to move some of that money or give a portion to her kids to ease things, she gets hit with a hold and a set of questions at the worst possible moment. This is completely avoidable if you walk in prepared. This matters much more right now this year. In 2026, a new federal law came into force that dramatically raised the penalties a bank faces for getting any of this wrong. We're talking about massive fines. When the penalty for failing to report goes through the roof, a cautious bank does the only sensible thing. It reports more and flags sooner. You, the honest senior, are more likely than ever to get caught up in a question or a hold simply because the cost of the bank being wrong went up. Please remember, being reported to FINTRAC is not being investigated or accused. FINTRAC receives millions of these routine reports every single year, and the overwhelming majority sit completely ignored in a database. No agent is assigned to you, your neighbors aren't told, and your pension isn't touched. The system is just a net designed to catch scam artists who prey on seniors and fraudsters moving stolen money. While it snags honest grandparents by accident, it exists to protect people like you. Your ordinary day-to-day banking, your monthly pension landing, paying bills, using your debit card at the grocery store, or sending a $50 e-transfer to your granddaughter never wakes up this machinery. Furthermore, if you want to give a large financial gift to a family member, remember that Canada has no gift tax. To make it completely simple, just write a plain single-line note saying, "This is a gift from me to you," with the date, and keep a copy. Generosity Documented is bulletproof. To make sure this whole process disappears without a single headache, follow these 5 steps this week. First, when a big legitimate amount is coming, just expect that it may be reported or questioned and know that it is completely routine. Second, never break a large amount into smaller pieces to stay under $10,000. Do it in one clean, open transaction. Third, keep your paper trail. If the money came from a house sale or an estate, keep the official documents handy so you can show the proof in one calm sentence. Fourth, for a large deposit, tell your bank a week in advance so they can note it and avoid a surprise hold. Fifth, whenever possible, move large sums by check, bank draft, or electronic transfer between your own accounts rather than in physical cash. The cash rules are the strictest. And if your money does get put on a temporary hold, stay calm and ask the teller 2 simple questions. How long will the hold be? And what exactly do you need from me to release it? Hand them your document, get a name, and let the process run. Calm and documented wins every time. There is a number, $10,000 in cash, that automatically triggers a report to FINTRAC. This year's new law has banks flagging harder than ever, but the report itself is a non-event for an honest person. Move your money in the open, keep your proof, and you will never have a bad afternoon over it. Keeping track of all of this is exactly why I put together the Canadian Seniors Money Playbook, a plain English guide that lays out the exact steps, deadlines, and numbers to keep in your drawer. If you want it, the link is in the description below. If this video helped you, take a look at the pinned comment and please subscribe. Every week I break down these exact kinds of rules in plain English so that nothing about your own money catches you by surprise. I'm Dr. Elizabeth Thorne. Look after yourselves and keep your money in the open.